Hello, this is Daryl for Tuesday, the 13th of September 2016. This is a DE market summary. So today the markets are down. They're all in red and negative territory. Why? The simple answer is oil. So today, the International Energy Agency, or IEA, made a very big statement that moved the markets. They said that a sharp slowdown in global oil demand. So we saw that sharp slowdown in oil demand in the summertime. Usually the summer in North America would have oil prices rallying because of um, the use of gas for vacationers, right? We didn't see that, and um, a number of economists were starting to talk about that that's a very bad sign because it really means that our prices will continue to go down, and it's exactly what the IEA is saying. They said there's a sharp slowdown in global oil demand growth coupled with ballooning inventories. So the inventories are continuing to grow and rising supply. There are more producers that are producing more oil. Iran is producing as much oil as they could produce, as well as Kuwait, right? Iran just started back producing oil, exporting it, so they want to just send out as much as they could, right? There have been no shutdown or decrease in production in Saudi Arabia as well as any other country, Russia, um, Venezuela. So, of course, there then would be a rise, right? A rise in the supply. And say all of these things mean that the crude market will be oversupplied, right? So it's what we've been talking about, the oversupply, and it's continuing, right? And it says at least through the first 6 months of 2017. So we were thinking, and other analysts were thinking that probably at the end of this year, we would see a decrease in inventory at least. And if we have a decrease in inventory, because I remember in one of my recordings, I spoke of outside of Texas, there are oil tankers that are parked there now for a number of months that are full of oil, just waiting for the right price in order to sell. So that is some of the inventories that we are talking about, right? So there's a lot of inventories that are sitting there just waiting to sell. We thought that most of it would have been used um, this summer with the major vacation driving that we thought there would be. Um, a number of times too this year we had possibilities of talks from OPEC to decrease or freeze production. That has not happened as well. It has just been talks. So with all these things in play, and also Iran getting their sanctions released, they then started producing as much oil as they could, right, to try to get as much money as they could right now. And we have Saudi Arabia, because oil prices have been down, they have not been making as much money as they used to. So then they're trying to sell as much as they could then, right, to try to gain back ground. So all these things in place, oil prices will continue to be depressed as they are right now, right? We might be at the bottom, as we heard a number of discussions that the $44 might be the bottom. $44 to $40 might be the bottom. We mightn't go back into the 30s, But as far as going to 60, as we had previous forecast saying, the IEA is now saying no, straight into 6 months into 2017, we'd be still at this depressed level. So that really affect markets when that came out. We had the sort of selling that we had on Friday that we revisited. The real bright spot, the lone bright spot we had was Apple. Apple had they were up 2.55% to $108.13. Big surprise too, because Apple they were a little bit crushed when they brought out their iPhone 7, and right at that point the market wasn't overly happy with the news, and it lost, right? It lost a lot of ground at that point. But today, Apple was the one lone positive bright spot that was trying to bring up the rise up, push up the Nasdaq, trying its best to push up the Nasdaq today. And so the Nasdaq would have been actually way down, much worse than it was today if Apple wasn't pushing up the Nasdaq. Because if you remember that I spoke about this before, that Nasdaq Apple is about 5%. It's very highly weighed on the Nasdaq. It's about 5% of the Nasdaq itself. So if Apple was up 2.5% and the Nasdaq is still down, it shows how far the Nasdaq could have gone today. All right. So let's have a look at our index here. So the Dow Jones Industrial Index was down 242.40 points, or 1.32% to 18082.61. The S&P 500 was down 32.02 points to, or 1.47% to 2127.02. So what we had, which was pretty sad for investors, was investors were seeing a very nice day yesterday, right? Yesterday was a major rebound from Friday. So I think after they seen a very good day yesterday, a number of investors came into the market, and you could see that with the volume there in the S&P 500 at 2127. So we had a lot of investors in the market. Nice volume, but too bad it was for a negative market, right? The Nasdaq was down 56.63 points to, or 1.09% to 5155.25. So as I was saying earlier, if Apple wasn't up 2.5%, that 56.63 points could have been much more, right? We could have been down 70 points or something like that, right? So Apple really helped out in Nasdaq today. We had oil down 1.37 points, or 2.96% to $44.70 a barrel. So as I said, it's somewhere around the $44 dollars a barrel range, and this might be the bottom, right? It might go down to 40, but analysts are not looking at it going into the 30s that we had before. All right, that's some good news at least. But could we see a rally tomorrow, Wednesday? Could our markets regain back its strength and start rallying like we had yesterday, like Monday? Because Friday, we had this real bad day on Friday, and the S&P 500 was the worst since, I think since June, it was saying, right? So it was pretty bad. And investors were, oh man, what would happen? Are we in a recession again? Saying that. But then Monday we had just a major turnaround. So could we have that again tomorrow? Absolutely, we could, because what we need tomorrow is some very good direction if we have some positive news in the early morning, in the early morning trading, just like this morning we had that negative news. If we could have some positive news, we could absolutely change the markets tomorrow and then positively. So what we are seeing is some very violent, very drastic swings in the market. Volatility is back, right? So we are seeing now volatility uh, just as we had in June. The volatility, we just recognized as the volatility index is the highest since June. So volatility is here again. So investors love volatility because what it could. Yeah, so tomorrow we could have a very nice rally um, going straight into the end of the week. If we could have some positive news right at the start of early morning trading tomorrow. Okay? So stay tuned. This is Daryl for the DE Market Summary. You have a good day.